Before we begin today's analysis, I just want to take a moment to acknowledge the current situation because there is no bigger loss than lost lives. It's deeply sad time with the ongoing conflict and the loss of lives. And our thoughts and prayers are with all those affected, and may the departed souls rest in peace. Now let's move into today's market analysis. After the recent value failures today, NIFTY did not recover back into the higher zones. Instead, the market stayed comfortable, much lower, and the volume profile clearly shows where the new acceptance is forming. Welcome back to Mind Monastery. In the previous sessions, we discussed how NIFTY failed to hold higher values and started accepting lower prices. Today's session becomes important because the market is no longer just rejecting higher levels, it is now trying to build value much lower around 22,500 zone. And if you have not watched the previous analysis, I strongly recommend watching that first. Now let's decode today's movement using volume profile and auction market theory. Earlier, the market was trading and balancing around much higher zones like 23,250 to 23,300, which acted as supply. 23,100 to 23,150, which acted as an intermediate acceptance area, and below that, the market kept rotating lower. Now, today, the market is trading around 22,500, which tells us that the auction has clearly shifted to a much lower area. Now, let's focus on today's volume profile. The most important feature is that the POC is developing around 22,500 to 22,510 region. This tells us that the market is currently considering this lower area as fair value for the day. In auction market theory, wherever the POC develops, that becomes the place where the buyers and sellers are most comfortable transacting. Today's profile looks relatively balanced and compressed near the lows, rather than strongly trending after the initial drop. This suggests that the market had an initial downside move, then started balancing near the lower region, and instead of recovering sharply, it continued to spend time building volume around the lower zones near 22,500, accepting those values. Need not forget that 22,500 is a psychologically important level too. This is an important sign because it tells us that the lower prices are not being aggressively rejected yet. So today's structure suggests more of a lower value acceptance process. So the market is currently sitting in a region where it must decide continue balancing here or extend the auction lower. Based on today's volume profile structure, these are the important levels to watch. The current value of 22,500, 22,510 region, which is today's POC and fair value zone. The immediate resistance of 22,600, 22,650 zone, which is the upper intraday rejection region, and major overhead supply, the marked pink zone above the previous strong supply areas, and supports, that is the lower green zone, next important demand reference. Now again, with the markets falling, we have to consider higher time frames also. So from the perspective of higher time frames, 23,500, 23,800, which was a strong supply area, can also act as the major resistance zones. Support zones 22,350 to 22,400, which can become the immediate support, and below that the next higher time frame levels can be considered. So the message from today's session is quite clear. The market is no longer only rejecting higher value, it is now building acceptance at a much lower level near 22,500. That means the auction has shifted downward, and for now the market looks more comfortable transacting lower rather than reclaiming the earlier higher zones. If you found this analysis useful, subscribe to Mind Monastery because every day we decode markets using volume profiles, smart money concepts, and auction market theory. Because the goal is not prediction, the goal is understanding how the auctions unfolds. Thank you.